Hello everybody and welcome to this week's Middle Class Investor. This is Seth Martin, your host. Well, it was another up week in the market. We're looking at the S&P 500 since the 2011 lows, and you can see down here at this end, let me highlight it for you. We had this up week, and the market just keeps on chugging higher. So we're pulling back to lows, but then making new highs. So that's the definition of an uptrend. And as long as the uptrend is intact, then the probability is it will continue. I know that sounds kind of ridiculous, but the probability is once a trend is in place, the trend tends to stay in place until the evidence shows that it has reversed. So nothing to say there except the trend is still intact. So the S&P 500, this line we have here it connects the highs from, well, let's go back and see where that's from. Starting in April of 2010. So you can see here I've connected these highs. And when you zoom in on it, let's look at it on let's look at a weekly. When you zoom in on it, the highs, and we've been talking about this before, where it got above the highs here, went below, got above again, went way below, got above them again, and is above them now. And the longer we stay above this line, the more evidence there then becomes for support. So this to be support. So if we went up, let's say higher from here, and we pull back, because we're now above this line, it could end up being support for bounces higher. There's not a lot of underlying fundamental reasons for the market to be going higher, but that doesn't necessarily mean anything. Sometimes the market just goes higher or goes lower because that's what it needs to do. That's what traders are making it do. So there's a lot of money that makes this trend happen and then keeps it intact. So it doesn't. Generally speaking, most of us have a lot less money than the people that are forming this trend. So it really doesn't make a lot of sense for us to argue with them. We just the whole idea behind trend following and that type of technical analysis or technical investing is really about what is the smart money doing. Then you want to be in gear with the smart money. So you don't want to be fighting against trillions and trillions of dollars, investing in a particular direction, and you got your few tens of thousands, trying to fight that trend. You just can't win that game. So technical analysis or trend following is all about, following the money flow. So that's what we're doing. And so far the money flow says the trend is up. So I'm starting to think now maybe the rising wedge pattern has failed. Once it starts getting narrow like this, once you start running out of wedge, then then maybe there's no pattern. And this is kind of the nature of technical analysis. There's a pattern. You see a pattern, but if the market tells you there's no pattern there, then you pretty much got to say there's no pattern there. The 10-year interest rate, this is an important market. I keep bringing attention back to this one. You can see here that we had an up week, but we remain below this line and this line. So as long as we remain below this line and this line, the chance for more down pressure still exists. So, but it looks like it wants to at least retest this high here. So we'll just keep watching it. It's either gonna come up and come through this, or it's gonna come up maybe hit this one or this one, and then roll over and go lower. And we'll just have to watch and see how that happens. It looks like the euro wants to go lower. I would have thought the euro would have respected this trend line here, but it has not. And it seems like it wants to go into this support area, which is a support. This support right here is support off this low. So let's include that low. We zoom in. And it looks like the euro wants to kind of just meander down into this area. Looks like the RSI is hit, kind of got in here to oversold, got into the area where it looked like it was going to reverse, and now it looks like it wants to roll back under the RSI 30 number. So we'll just continue to watch that. The euro, I think it's if you wanted to short the euro and go long the dollar, I think it's a pretty good bet, although you might want to wait for a bounce up into this area. But short the euro, long the dollar is probably a good, what's called a pairs trade. And since I brought it up, let me just see if I can show that to you. The idea around a pairs trade is that these move in opposite directions, and you can see here, if you'd have traded this as a pairs trade right here, so long the euro, short the dollar, and then when they reach parity, that's when you get out of the trade. And so we talked about this maybe bouncing some. You could maybe at this point you could short the dollar and go long the euro, and then around 130, exit the trade. But the idea is this is at an extreme on the upside, and this is at an extreme on the downside, and they come together, and then the trade's over. So that's what, if you hear about a pairs trade, sometimes they'll talk about that on some of the financial channels, or you'll hear them say short the dollar, long the euro. That's what they're talking about. It's just a way of recognizing how two markets move against one another, and when they reach an extreme, you can trade them back to the mean, which is what is the theory behind that trade. Let's look at Germany. Germany looks like it's bouncing off of this trend line that goes back to mid 2011, and now is pulled back to the trend line again. It looks like it wants to bounce higher. So Germany looks like it's bouncing. Japan has been in a sideways pattern, not really doing a whole lot. It's kind of just flopping around inside this zone between 1220 and 1050, and until it gets either out of the zone on the upside or out of the zone on the downside, you're probably not going to see a lot happen in Japan or with Japanese market. The United Kingdom looks like it broke out of this pattern. There's kind of a channel. I wouldn't call it a wedge, but it's more of a channel that's been trading between this upper trend line and this lower trend line. Let's zoom in on it here a little bit. Let's zoom in a little bit more, and you can see that price has been bouncing between these, and then the week of September 22nd, it broke out of this channel, kind of bounced back up, and then went back down. So maybe we get a test under here of the underside of this channel and more selling. That's probably a very probable way of trading it. Right now you could trade it maybe long, at least to this high and maybe to the bottom of this channel, which would be around this high right this high right here, maybe around what is that, 2022. Let's look at the VIX. We had this little excursion outside of the trend line. I drew this way back, probably drew it back here around mid-September, and in fact we could tell. Let me turn the extend off. Yeah, so I drew it back here around mid-October actually, and the trend line, with the exception of these 2 weeks right here, is really kind of held up, and you can see that We pulled right back. The VIX pulled right back to this line, and maybe that's telling us there's going to be some selling next week. I'm not sure. I mean, certainly the VIX could plunge right through this line. I mean, there's nothing magic about this line. It's just to call attention to where there seems to be some agreement. That's the purpose of trend lines and support and resistance, things of that nature. We can look at gold. Let me get in a longer term. Let's go to a weekly chart. Let's look at GC, gold. And you can see the long bull run in gold, the 12-year bull market. And then here we see the sell-off, the 3-year sell-off that we've been living through so far. And it looks like still that gold has put in a low for the time being. Although I would have expected a breakout of this consolidation would have taken us lower, into this support area here around 1100, but it stopped short around what is that, 1130? Only $30. I mean, it's not that much difference. And it bounced. It looks like it's pulling back and bouncing. And sometimes when a market makes a low, it'll bounce a couple of times, maybe even 3 times, before it really starts to run. And you can see that in the dollar. If we look at the dollar, one of the things that makes me think that gold is not through going down is just that the dollar looks like it wants to travel up into this area here. And you can see here the dollar kind of made a low, went up, made a low, went up, made a low, and then it really started to take off, and even here, you had just kind of bouncing along the bottom and then boom, took off. So gold could do the same thing. I'm looking for the dollar though to get up into this 93 area before it starts pulling back. And it could start pulling back here, but because it's already taken out these 2 highs here, and a lot of times the market will go from pivot to pivot. So this support area or this resistance area is really a zone off of these 2 highs here. So, and you can see there's really no others except this one, and it could pull back to this pivot and then pull back. So, but I don't think the dollar's through going up, which kind of makes me think that gold is not through going down. But I don't know, this gold bounce looks pretty strong, and it seems like it wants to get back up into this area. And certainly if it gets north of this, I think there's gold is through going down for the time being. So that's gold. That's really about it this week. There's nothing really much more to say. We can look at the S&P 500, or did we look at the Dow? Maybe we didn't look at the Dow. Let's look at the Dow. If you look at the RSI, it kind of broke below this zone and then curled up. But then, the Dow made another high here. So this high is higher than this high over here. This high was 17,991, and this high was 18. What's the high there? 18,103. So the Dow definitely made new highs and made new closing highs, all-time highs, and it looks still pretty strong. I would say, if you're in, you stay in. You don't do anything at this point. I think a critical area. Well, first of all, we're going to need to see, the zone from right here taken out. So we're going to need to see some pretty significant selling before we can even. In fact, I don't even think that's what'll likely happen. If you do see a trend change, you're going to see it break this low first. let's zoom in a little bit here. You'll see it break this low first, come up and make a lower high. So right now we've made a higher high. So the only way the trend can change now is if we come down and make a lower low, and then come back up and make a lower high, and then come down and make another low. So we're quite a ways off from a trend change, and maybe after the first of the year we get a little bit more correction. We'll just have to wait and see. But certainly this market is very strong right now, and there's a lot of bullish tendency to the market. So I don't know that I would. You can always sell into strength. There's nothing wrong with that, but I certainly wouldn't sell everything. If you wanted to take some off the table, there's nothing wrong with that, especially if you're, closer to retirement age and you just feel like, 200% or whatever the market's been up since the March 2009 low. If you feel like that's, a good return and you want to hang on to that and you want to reevaluate, there's nothing wrong with that. But certainly I wouldn't take all that money off the table. I would continue to stick with the trend as long as you can. The trend, it will surprise many people, both on the way up and the way down. So you can't, calling the top is very, very difficult. I didn't think the market could get to 18,000, and yet here we are. So that just goes to show you, it doesn't do any good to forecast where the market's going to go. Although there's a lot of people doing that. So I think that's just the nature of it. People like to do it. It's fun. It's kind of fun to be, you're wrong 10 times in a row, and then you're right, and you're a hero because you're right. But at the end of the day, it's very difficult to call these tops, and certainly the market is extending this rally further for whatever reason. And when it does, you just got to kind of stick with it. So, all right, everybody. Well, that's. Hope everybody had a Merry Christmas. We had a Merry Christmas. Went to Dallas. That's where I'm originally from, and then came back to the Houston area for Christmas Day, and had good times with family and friends, and ate too much sweet stuff, which I can't seem to push away from, and it was all good. So it's back to work next week, and got the new year 2015 starting, and for someone like me who's in sales, you always go from hero to zero, back to zero. So starting in 2015, it's back to zero for me. So hope everybody did well. Hope your family and everybody is safe, and just take care and enjoy the new year. Be safe, everybody. Bye-bye.